Yeah, I think, Carol, that all the meme stocks from 2021 were dumb businesses. I couldn't understand it at the time why retail traders were getting so wrapped up in AMC, GME, and BlackBerry. I think those were the big three. I like th those are all like Walking Dead businesses. So when I got into Opendoor, and then I first started tweeting about it last Monday. It's hard to believe. It feels like a century ago. Like 2:45. Like I got into it because this is a real business, and it's got a real platform that it's built, and it's definitely fallen on hard times. That's why the stock's down like 99% or whatever it is from its all-time highs. But I just think that the market got overly pessimistic about it. And I've seen this movie before with Carvana. Like that's one of my greatest heads on my wall, I guess. From the past is that I got into Carvana early, not at $3.50, but at $15, and today it's like close to 400. And I just see so many similarities between these two businesses, and all people just get overly prisoner of the moment, pessimistic about these companies, and everyone's negative Nelly, and everyone loves to dance on the grave and say that these companies are circling the drain. And nobody would have believed that at 350 that Carvana was going back to 400.
Hmm.
Nobody can believe now that at it was 70 cents last Monday. Now it's whatever it is, $3 today. That this thing is, I think, going to $82
Yeah.
by
Well,
2028.
okay. So let's talk about that. It's $2.80 right now, down about 12, 13% as we speak, just on the day today. You have a price target of $82. That's pretty wild. Make your case to us on why you see it moving that high.
Well, I mean, I'll be even wilder, Tim. I think today it should be trading at $40. It's like basically the if you go back and look at Carvana, okay, use this as a comparison to Opendoor. Both of these companies, they're trying to e-commerceify some niche that hasn't been e-commerceified before. For Carvana, it was buying and selling used cars. For Opendoor, it's buying and selling homes. It's a huge business, obviously, in both cases, a national business, where just having like 1 or 2 or 3% market share nationally, is talking billions and billions of dollars and power, like because it's all so fragmented today, with the dealers in the car industry and with the agents, in the real estate industry. And Basically, you need a lot of debt to run both of these businesses. And so the problem that both of these businesses came upon is that although they were flying high in the pre-COVID and then briefly post-COVID era, when interest rates were low, when Powell started raising rates, suddenly investors got nervous and these stocks crashed. And the assumption was that they're gonna go under. They're gonna file for bankruptcy. So they're priced as if they're gonna go bankrupt. And I don't believe that's true. Carvana, in fact, I was on a podcast in June of 2022 with Josh
Well,
Brown and Michael Batt, where I called both, like I said, both would turn around. Carvana did, and Opendoor didn't. I was dead wrong. Like it took a lot longer for them to get to the point where they're about to turn profitable, but they are about to turn profitable.
So for Opendoor, do you expect to inject and invest more money into it and then take a profit? Or because it sounds like you've done the research, looked at the business, maybe talked to the company, that this is more of a long-term buy and hold strategy for you? Which is it?
Well, I've been fortunate to be early on a bunch of companies. Like I was like really early on Alibaba, even back in 2009, 10, when it was still a private company. It was valued at 10 billion. I thought it was going to go up. Carvana, some other ones. Like what I've learned, Carol, is that like it's always hard to not avoid the temptation of firing up the terminal or turning on business TV and getting emotional about the macro headlines of the day and get shaken out of these positions. And sometimes when these companies are pretty rare, that can truly 100 bag or 100x, right?
Mm-hmm.
But like, it's so easy to get shaken out of these positions. Or like in the case of Carvana, like I said, I got into it at 15. I would say I got out of it, the bulk of my position in around like probably 130, 140, 150, somewhere in there. And I'm thinking, oh, I'm so smart. I made 10x my money pat myself on the back here, and I know this company really well. I still was optimistic about Carvana and still
Right.
am today. But I thought like, I'm just going to trade in and out. And the truth is you don't make as much money as if you do nothing and just let it sit there. So I'm not like jumping in to add more, Carol, but because I want to see how the things play out. But I'm going to try to avoid that temptation and just sit and do nothing
How much?
until 80.
Can you give us an idea how much you have put into it? And is it all your money? Is it investor money?
Well, I run a fund, Carol. It's a small fund. I'll be frank with you guys. It's like I had a huge billionaire that basically was like a cornerstone investor for me
Right.
in 2016, 17 when I started EMJ Capital. And he said, I like the way you think, Eric. You look at companies differently. You find these like little hidden jewel companies. How about I give you some money to manage? And I did and did great. Like it was kind of like a Kathy Wood type arc, like 2017 up to,
Mm-hmm.
probably February 2021 was amazing, shot the lights out. And then 21 and 22, I got crushed. And I didn't diversify my, what do you call it, customer base, and so like 99.5% of the capital in the fund was this billionaire. And he took it out. And which was his right, and I'm so friendly with him, but I was sort of like left scrambling and trying to figure out what to do, and so kept the lights on, pivoted it to building a team to build AI models. But have been it's been hit and miss the last few years. And then it was only like probably 3 months ago that I realized like, hey, we're doing. I keep finding these companies. Why don't we just sort of go all in on that? Let's get the AI models totally focused on finding these 100 baggers before the fact. So the remaining capital we have, which is a few million, we put in, obviously we didn't put it all into Opendoor or anything. We have other positions. There's sort of like 5 key positions that I have right now: iron, cipher mining, BTQ technologies, and Ethereum. Those are the kind of the big 5 I'm focused on. And, we'll see where we go. And,
Eric,
all I got is my reputation, guys.